There can never be a perfect picture. Your love for a Picasso cannot be compared with mine for a Matisse, and that's what gives the world's best art fund managers to leverage for sky-high returns. Mohini Verma finds out how after the success of the first few art funds in India, money is pouring in and many more funds are lined up.
When the Ambanis and Tatas play dabble in this passion, money has to be a part of it. While for them, art may be a creative distraction, for investors on the prowl to make money, raising funds for investing in art is now a big attraction. The coming months is set to see massive fundraising for art-related investments. Art funds are expected to mop up Rs 300 crores in the next few months. The largest of them will be through Copal Art, which will raise Rs 150 crores. This will be managed by Mr. Ajay Seth, who is the chief mentor of Copal Art Limited. Yatra Art Fund is all set to raise Rs 100 crores from its second fund. And the relatively new Crayon Capital is all set to mobilize Rs 40 crores.
The volumes of art have been tripling in global public auctions every year. And the average price per painting has increased by about 700% in global auctions. So as far as art is concerned, we do see art doing very well for the next 5 years.
So is it time to say, move out stock markets, hello art? Some of the indices which track comparative returns seem to suggest so. It is not just blue chips or realty, art is beaming on the radar of more and more investors. The art industry is growing at the rate of 35% annually. And according to the Economic Times and Ocean's art indices, investments in top-end select blue-chip artists in 2005 saw whopping returns of 154.8% in comparison with 46.7% from shares and 24.6% from gold. Analysts believe that the art industry is far from being overheated. Instead, they believe that the art industry is still at its nascent stage and can only grow bigger over time. However, the worry is that the demand for art continues to overshadow supply. And with so much money being raised, too much cash chasing and too few artists can raise problems of regulation.
You've got a boom, you've got a bandwagon. This is as dangerous a time as it is good a time. So I think everyone needs to be much more circumspect, and you need to do much more homework.
A pot of gold at the end of the rainbow, a myth and now a reality. Art has proven itself to be favorable in comparison to other investments. Transparency, credibility and an organized structure for art funds in the future will provide the next trigger of growth for the industry.